Good morning, everyone. My name is Amy French, head of Level 39, and it's my pleasure to welcome you to this morning's virtual event, The Future of Blockchain and Crypto, Where Do We Go From Here? A special welcome to my panelists who I'll welcome to the stage shortly, and that is Samantha Yap, CEO and founder of Yap Global, Asha Tan, co-founder of CoinJar, and Adi Ben-Ari, CEO of Applied Blockchain. So the theme of this panel is the future of blockchain and cryptocurrency. Specifically, how can we differentiate the hype from the real-world benefits of these technologies and their progress? When we speak of cryptocurrency in particular, there is a strong divide between those who are skeptical of its future and those who strongly believe in its potential. Looking beyond the headlines generated by Bitcoin, Elon Musk, and Dogecoin, it's undeniable that blockchain and cryptocurrency is a fascinating topic and one that is a huge success story of recent years. 2021 is proving to be a record-breaking year for cryptocurrency, attracting day traders and retail investors to a greater extent than ever before. Hardly a week goes by without Bitcoin setting a new record, or by a new development sending it crashing down again. And for many of these day traders, getting involved in the roller coaster and the hope that one day they might cash in on it all. Coinbase, one of the world's largest cryptocurrency exchanges, went public this year and listed on the NASDAQ in a landmark moment for the global industry. But of course, there remains significant speculation over the future of cryptocurrencies globally and its underlying ledger technology, blockchain. Skeptics may argue that without more sophisticated uses for cryptocurrency, the speculation-fueled ride will be coming to a dramatic end, whilst others suggest that we're just at the beginning of the road for these technologies, with new applications and advancements set to unlock near endless possibilities. This session today will present a perspective on the future of cryptocurrency and blockchain, asking what the rest of 2021 is likely to have in store, along with the long-term view and real-world applications for both cryptocurrency and blockchain. But before we jump into that conversation, I just would like to remind our audience that the format of this morning is a 45-minute panel discussion, followed by 15 minutes of Q&A. So please do pose questions throughout using the Q&A tab on your screen. We'll then open to informal networking at the end as well. So now I'd like to welcome our panelists to the virtual stage. Please come on in, Adi, Sam, and Asha. Perfect. Great, thank you so much for joining. It's wonderful to have you here this morning.
Thanks so much for having us.
So to kick off, it would be amazing if you could each introduce yourselves. Perhaps Adi, if we can start with you.
Yeah, sure. Adi Ben-Ari, I'm founder and CEO of a company called Applied Blockchain. We started our journey at Level 39 5 or 6 years ago now. And we've been building solutions using blockchain technology for a whole range of clients. We've probably built over 100 solutions now, for clients ranging from startups to some of the largest banks and corporates in cryptocurrency, smart contracts, private blockchains, you name it, and also a focus on privacy technologies as well.
Brilliant. Thanks, Adi. Sam?
Yeah, hi, I'm Samantha. I'm the founder and CEO of Yap Global. We're a PR agency specializing in blockchain and cryptocurrency projects. Yap Global is 3.5 years, and I think we've been at Level 39 for 2 years now. We've just spent so my background's in journalism, and we spend a lot of time educating mainstream media about cryptocurrencies, but also studying and understanding the technology to the T, so that we're able to tell accurate and compelling stories for the space. The last 6 months have been quite a whirlwind with mainstream media attention, paying attention to this space. So there's a lot to talk about. So excited to dig in.
Great, thank you. And over to you, Asha.
Hi, Asha Tan, CEO and co-founder of CoinJar, consumer-focused cryptocurrency service running since 2013, predominantly in Australia, but we've had a Level 39 membership since 2014, and officially launched our UK service to retail users in May last year. So it's been a very exciting year in the UK, definitely, especially with the bull run. So glad to be here.
Wonderful. Thank you all. It's great to have you all here this morning. So kind of touching on what Sam said about the recent developments of crypto, it's a big topic and one that's creating passionate debate. So perhaps if we start with the fact that, the price of Bitcoin increased to record levels this year, surpassing, was it $64,000 in mid-April, up until this month, where I think the value almost halved. So what are the underlying factors that caused that, and what are the implications? Perhaps who wants to start with that one? Maybe Asha, coming to you first.
So I think most people know that there are no real fundamentals behind Bitcoin and other cryptocurrencies. There's unlike shares or stocks with forecasts and earnings calls. We don't have that in cryptocurrency, but we have seen cycles and swings. And I remember when the pandemic hit at the beginning, and crypto prices, Bitcoin prices also took a hit. Everyone said, well, this is supposed to be uncorrelated with the market. Why did it fall? But as we can see, it's still subject to the same retail fears and confidence in the market. And I guess over the course of the year, I guess most people saw, hey, the narrative of Bitcoin didn't really change. The fundamentals, which I guess if you talk about decentralization, the ability to use it, and the network strength is still there. And I think that sort of brought many people to renewed interest in the asset class. But I think generally over the last year, we've seen retail investors get more interested in the market, looking for ways to invest, put their money, especially, part because of the pandemic, but I guess part, looking for new ways to invest in this new sort of reality we're facing. So yeah, I mean, we've seen 2 or 3 big cycles, I think, since Bitcoin started, and I guess this is just another one of them, at least from an operator side of things.
And on that note of the kind of increase of retail investors during the pandemic over the last year, perhaps if I come to you, Adi, what's the likely long-term impact from that increase?
I mean, we've certainly seen, we saw massive turnaround in our business. So we saw big interest in crypto in general, meant that a lot of blockchain projects came to life. So a lot of people that were speaking to us previously were now becoming more aggressive in getting their projects and initiatives off the ground. And the different blockchain platforms out there, everyone who had funding before, suddenly their funding grew. The value of their funds grew, and so they were able to invest further into developing their ecosystems. So we saw a lot happen. The interesting thing for me is we're sort of watching this. We've been in the space for a few years now, and we kind of saw. I guess I think of us as kind of among the survivors, right? Because we had a big peak in 2017, we had a trough in around 2018, 2019, and now it's picked back up again. It was very interesting to see those companies that were invested in that kept doing the work, right? While everybody else, almost stopped talking about blockchain. And then suddenly it came back, and you could see these projects that had really come a long way and were just ready to take the market or ready to do really meaningful things. So we've seen some substantial changes. We've seen a lot of work that we've been involved in particular in the NFT space. So the non-fungible tokens, the artwork, the digital artwork, other types of collectibles and commodities. So we've got a lot of really interesting work in that space, and that's been driven by what's been kind of happened together with this crypto resurgence. And the other thing that goes with that is DeFi, which I think is super, super interesting. And the best part is when you bring all this stuff together. So you start having these collectible, these valuable items, which are valued on the platforms, and then you can start using them as collateral for borrowing, and you just start having this system that just feeds off itself. It's really super interesting and very cool.
Yeah. I just want to touch on, in addition to that, so we've spoken about the retail interest, but I think what has really driven the price of Bitcoin in the market is also the institutional flows of money. So, I mean, when MicroStrategy started you're seeing listed companies buy and store, their wealth in Bitcoin. Square, Jack Dorsey from Square came out and put, a bunch of their treasury on Bitcoin, and then even just Elon Musk and Tesla and maybe Dogecoin adding to that to that surge in the flows of money. I think that this because YAP Global started off the back of the 2017 kind of hype or kind of bull run. This time, people are saying it is a little bit different. And yes, as Adi pointed out as well, I think DeFi, decentralized finance, a lot of activity took off mid-year last year during the summer. They call it the DeFi summer I guess in a sense like treadmills of like money or crypto kind of like moving between protocols that has really driven activity and interest in the space. So I think that's why this time this bull market is a bit different and a little bit wilder.
I would add to that also the institutions, absolutely, but also COVID, with people staying at home and kind of being more on their screens. I think a lot of people have dabbled in trading.
Yep.
Right, whether it's the Robin Hood style or going into crypto. I think there's just been a lot more of that, and so I think there's a few things that kind of all came together at the same time.
Yeah, then a combination of like the stimulus packages that people were getting in the US. So yeah, you're seeing millennials.
Low interest rates, lack of anywhere else to put your money and so on.
Mm-hmm. And also trust, because people are concerned with all the money printing that's happening, with the federal banks, and people are seeing Bitcoin still as a safe haven or the digital gold.
And Sam, just staying with you for a moment. So we hear a lot about crypto in the press, but there is often a bit of a negative light shone on that. So why is that, and how do we make that rhetoric more positive?
Yeah, I think a lot of it comes to understanding. I think when people don't understand something, there is that element of like skepticism and just concern, because this is still a new technology. I mean, cryptocurrencies, Bitcoin, people are still not familiar with it. I mean, I think by now, most people know about Bitcoin, but they're not so familiar with cryptocurrencies. So I think it's a lot of the education. So us as a PR agency in the last 6 months have really spent time like working with reporters, explaining to them why they should take another angle, why a certain angle probably wouldn't fly right now, because I won't name the publication, but we had a journalist come and said, all right, I want to write a piece on how to launch the next Bitcoin. And while we understand the intention of the piece, Bitcoin's been around since 2008, 2009. Like there's thousands more cryptocurrencies now. A better narrative would be kind of, what to look out for next, for example. So yeah, a lot of education still needed. And yeah, we're still quite early in that respect.
Absolutely. Asher or Adi, anything from your side to add there?
I guess from my perspective, there's a few things that we think are inevitable, right? And one of them is that we will have a commonly used form of digital currency within the next 5-10 years, right? Whether that comes from central banks, or whether it's stable coins, or whether it's crypto, whether it's a combination of the three, we don't know. But it's fair to say that amongst that set, we will have commonly used digital currency tokens in circulation, used by consumers and businesses. And if you think of that as if you accept that as an inevitable, then I think you have to really look at all this stuff that's going on. And obviously, people are thinking, well, Bitcoin's a big part of that, or Ethereum's a big part of that, or actually this will all be done through central banks or whatever, right? Different people have different views of where this is going to land. I think crypto has some big challenges. So obviously, one of the big challenges is on the regulatory side, and knowing who's involved and so on, and potential money laundering. There's also the environmental issues, in particular proof of work, which is part of what drove the kind of recent downturn or end to the bull run. And there's also the threat to the central bank, right? There's a threat to central bank policy, which is also the attraction for a lot of people, right? It's like having this independent scheme which is outside of the banker's control. But the whole surge we've seen in CDBC, in central bank digital currency research and work, came off the back of the Bitcoin announcement of creating a new currency, DM, which has since been massively watered down into a digital dollar. But that whole thing just woke the banks up to hang on. These things will take a portion of people's income and put it outside of our control. And so there's a lot at play here.
Brilliant. Thanks, Adi. And so moving on to crypto in a kind of real life setting, both the opportunities and challenges for crypto businesses, how it's being integrated into wider financial services. Asha, coming to you. So how is technology making it easier for people to invest in cryptocurrencies outside of a professional setting?
I think outside of professional settings, so I think retail investing apps, as mentioned, having a bit of a renaissance, over the last year. The names Robinhood, Trading212 in the UK, and I think many of these platforms have integrated crypto in some shape or form, and even PayPal in the US having a buy cryptocurrency, Square Cash as well. So I don't think it's particularly crypto-centric, but retail investors are looking to invest in this asset class. Whoever is delivering these services right now, apps, retail trading platforms, consumer-focused platforms that make it easy, have decided that this is where consumer demand is. So in that way, I think that has really opened the market to more people investing, not even though Coinbase may be the default for many people as the largest cryptocurrency company out there, but I think that shows that there are more avenues for people to use and invest in crypto just besides the usual I'm a crypto company. This is the only place we can use cryptocurrency.
Okay, and I guess then coming to Adi as well. So how are banking platforms integrating cryptocurrencies and blockchain into their offerings for clients?
Interesting thing that we've seen, because in the first few years of blockchain, we had a lot of these private blockchains because I think banks and enterprises couldn't really get their head around crypto and couldn't see and weren't comfortable engaging with it. And for regulatory reasons, legal reasons, all sorts of reasons. And so they went down this very, very safe path of effectively extending their database systems, right, using this technology. And so while there have been systems built, I would argue that they haven't brought tremendous value from the technology, right? Certainly not the potential that we're seeing being played out in the crypto world. On the other side, what we've seen in the last 6-12 months is we've seen institution after institution integrate directly with crypto, right? So go to the opposite extreme, and with everything that's happened in the crypto world, the clients are saying, well, can we invest in this? Can we get the upside of what's going on here? And so the large institutions have been one by one running to integrate with it directly, and we've also we've seen corporates. PayPal was mentioned, obviously Tesla, and some very big corporates directly working with crypto, and that's new, right? And that's something that people weren't really comfortable with before. So that's a fundamental change, I think.
And do you think more can be done to encourage that collaboration between corporates and kind of the crypto industry?
I think the demand isn't coming from them directly, right? They had the chance to do this years ago. It's coming from their customers, right? I think, and the chance for them to really profit through bringing their customers and integrating with crypto. So I think it's purely economic, as these things generally are. But the market forces are pulling them towards this environment, or certainly they have been in the last few months. So it's very interesting to see, certainly from institutions that were, very conservative, had very conservative stance, or even negative stances when it came to crypto previously. I think also the tools have matured, so the ability to monitor, what the history or the past of the crypto you're dealing with, the ability to sort of, crypto has this kind of two faces to it. On the one side, it's very transparent. On the other side, it's anonymous. And so there is this kind of interplay between these things, and I think the institutions are getting more comfortable now. The tooling is maturing for them to be able to sort of be on the safer side of this from their perspective.
Yeah, and on the point about maturing tools, like you're seeing a growth, a growth of professional financial services that cater to crypto adoption. We work with like a custody provider, for example, digital asset custody provider, and as you said, Adi, it is coming from the clients, the customers of because our client was actually a traditional trust fund, but then the client's like, well, we want to hold crypto, we want to have that, so it's like, yeah, the growth of those services, and then there's also these like centralized finance, so the term CeFi, but you're seeing crypto lenders, for example, which enable you to earn interest on your idle assets. Companies like Nexo and Celsius, so it's like a good interim. People kind of being able to trust still like a professional centralized financial kind of firm, but still participate in the crypto markets.
And I imagine some of this change also come from kind of awareness from the media. So Sam, how has mainstream media awareness about crypto changed recently?
So it's been as I said, it's been an interesting 6 months, but I think that we progressed from 2017 because you're starting to see more reporters, pay more attention. You're starting to see Bloomberg, for example. They have now several reporters that cover the crypto beat in a sense. They're cross market reporters. Yeah, the cross market reporters are now regularly covering crypto, understanding it more. You're starting to see like CNBC, even Wall Street Journal, for example. They recently put out a piece on decentralized exchanges and talked about Uniswap, and that was a big kind of credibility. Like that lended a lot of credibility to DeFi, and so yeah, it's really progressed. Thanks in part to actually, like the Elon Musk kind of growing the hype. I mean, in some respect, the Dogecoin discussion has been unproductive, but it's also driven interest. So it's like a double-edged sword with that one.
Someone explained to me how a man who runs the largest automotive company in the world now, the most innovative, a space company, right? Space travel, spends his time talking about Dogecoin. It doesn't make any sense on any level. The guy must be busier than that.
Do you have people referencing Elon Musk when they talk to you guys?
Right.
Well, yeah, I mean, so we've had, for example, journalists, because, yeah, as you said, he is kind of quite well known, obviously, got a large Twitter following, and also like to understand the media as well, which play a big part in garnering interest in blockchain and cryptocurrencies. They also need to write for their audience, and they need to write things that will get clicks, that will get attention, and unfortunately or fortunately, I don't know, Elon Musk has garnered the attention of a lot of their readers. And so they do come to us and they're like, hey, we're working on this piece about like Dogecoin. Can we get some commentary from your clients? And then our clients are like building, proper financial services for like institutions. And they're like, do we really want to comment on Dogecoin? Probably not productive at this stage. So yeah, it's a balance. It's a mix.
I think the other thing to note is different markets coming into this now. Right, so definitely the financial institutions, but also the art world, right, can't be ignored. I mean, Christie's, and also sports. I mean, we had the NBA Top Shots. We've had the Christie's and their third biggest sale in history. This digital art piece, which is nothing but I mean, there's a digital piece there, but there's also the underlying non-fungible token, which sold for over 60 million. I mean, these things are huge events from the media's perspective. Right, the NBA has made a huge amount of money out of its digital non-fungible collectibles, a huge amount of money compared to its regular revenue. And Christie's and all of that world is now moving on to this type of platform, is now migrating. Artists and artist communities and collectors, and it's all intertwined. So they're interacting with crypto. You can pay for these things with crypto. These are As I said earlier, you can use them as collateral in the crypto world. But this is also institutions, just like Tesla and some of the banks coming out and PayPal. This is Christie's. I mean, it doesn't get that much more old world institution than some of these players, and they're getting very comfortable with it.
And I have to say, NFTs and art has actually helped. So it's quite interesting because we work with a lot of decentralized finance projects and protocols, and they're building things, but it's actually quite complex and still technical for the mainstream audience to understand. But NFTs has really helped driven that interest into this space because they make for great stories. I mean, to hear that a JPEG file sold for 69 million is like wild, bizarre, and it's fascinating to hear that, Paris Hilton is, putting out NFTs. A lot of other DJs and artists are, releasing their music in the form of NFTs. That, has actually helped this time around.
The other concern, though, that's worth adding, I mean, this is from the regulator's perspective, is that if there isn't much regulation around this, then it's very difficult to know what's real and what isn't. You get a lot of things which, for me as a technical guy, make no sense at all. Just as we had in 2017, you get vast quantities of funds being poured into projects that don't make any sense. And I think this kind of happens with these bubbles, right? And it happened with the .com boom, which isn't a fully regulated industry, right? Or surrounded by regulated financial services. So you do have these new technologies come out, and there's cycles, and there's a lot of excitement. There's also a lot of nonsense. So you really have to you have to be careful about how you analyze this and how you approach it, and be very sensible about it, I think.
Asher, has all of this kind of activity changed much for you over the last 6 months, a year, or the way that you kind of share the work that you're doing at CoinJar?
It's been pretty much the more of the same. I think some fundamentals have changed. I think more and more accepting this is a multi-coin reality. There are different assets. A few Bitcoin only platforms, but it does seem very much that not only are we in a reality that we have to deal with different types of blockchains and cryptocurrencies, but I've spoken earlier, NFTs as well, and different types of ways of imagining value and trading them. So for, I think, crypto consumer focused companies, it's more of the same, trying to deliver value to users. I think a lot of questions around, how much of this is pure speculation, how much of it is, new finance, or, increasing the financial well-being of your users. And, that's, I think, the press asks that quite a lot, and especially as, we get more aggressive in trying to share the message, and as a larger group of people start interacting with it who are probably not as, purpose-driven or technology-driven as the early, adopters. Where do we go from that? And I still believe that both the companies in this space who will prevail, and I guess just the overriding community, as I say, are still looking for things that challenge the existing financial system, both in terms of efficiency, quality, user experience, and hopefully asset prices as well. So, with a larger crowd, I think the narrative tends to change. It's inevitable. It's not the same, group that we've been preaching to all the time, but that's not a bad thing. I think the community still stands for something, and I think we're still building all those things that we initially wanted to do, when we first started, or when people got into the cryptocurrency.
And you mentioned there also financial kind of well-being, wellness generally. Do you think, well, as we look to the future, do you think that crypto solutions will be increasingly utilized to improve people's financial wellness?
I think it has to. I mean, if it doesn't, then it will just cast aside. I mean, it's not. I think, again, unfortunately, there are always parallels to the gaming, gambling industries, which I think more entertainment in such. But I think most of the verticals for people building infrastructure or services. We're not looking for entertainment as such, although there are entertainment verticals in it. I think the larger industry is building infrastructure, financial services infrastructure, more than just purely entertainment tools, which has its place, but that's not what everyone is working on largely.
And coming back to Adi's point earlier about regulation. So do you think, Adi, that regulation will enhance or hinder the sector in the future?
Well, that's the big one, I think. That's the big question, really. I mean, the regulators, to some extent, they have the power to almost kill this. And that's what we're seeing in China. Just, that's also what's dampened the market. But on the other hand, there's so much innovation here, right? There's tremendous innovation, so they have to find that balancing act. I think the technologies that are being developed, this kind of new world of financial services infrastructure that's being developed. If you shut that down, that's that's really that's a bit of a risk as well. So I think there's a balancing act, and there's a general maturing of everybody. There's a maturing of the technology. There's a maturing of the public in understanding this. There's a maturing of the press in dealing with this. There's a maturing of the regulators. So over the last few years, even before we had this recent rise, we had regulator after regulator coming out with small steps. Right? We had new mechanisms in Switzerland, and we had new EU commitments to digital currency and so on. So we've had all these small things where you suddenly look back after a couple of years and you say, wow, a lot of things have just shifted here, and you don't necessarily notice them all in one go. But I couldn't tell you where. I mean, that's really the big question. You've got two worlds developing here in parallel. You've got the cryptocurrency world, which is open, which has tremendous innovations, huge efficiencies, and openness. And on the other side, some parties looking for a lot of control, looking to leverage some of that innovation and a lot of control.
Yeah.
Probably depends on the country, right?
Yeah, I think you sum it up pretty well, Adi, because it's not about, so everyone says regulators need to keep up, but I think they need to shift their perspective because, you're hearing of governments like China and like India that's tried to ban cryptocurrencies. But you can't necessarily ban something that's open. Like you can't ban someone from buying Bitcoin or buying a cryptocurrency on a decentralized exchange. It's like waking up to the reality that there are people storing their wealth and moving money around the world without banks and without a government being able to track where that's going. And it's like having that reality check to go, okay, so, what's the best way around this? So, yeah, because you can't necessarily ban a 24/7 decentralized exchange.
Yeah, it's definitely a balancing act. I think the internet is very comparable, right? Because bad things can happen on the internet, and bad things can happen in crypto. And so, having no regulation at all or no control, maybe that allows for too many bad things to happen. Maybe there needs to be something there, or some sort of mechanisms. But on the other hand, shutting the thing down, some countries have closed off their internet, right? I mean, that shuts down access to a lot of good stuff. And so, I think that's the conundrum for the regulators.
Asha, what do you see as the kind of impact from the regulators?
Maybe I can speak directly to, I guess our process of being regulated in the UK. I think so. There was a deadline for FCA regulation, I think middle of last year, with an early bird period, which we submitted our application in. It was supposed to come true by the end of last year. FCA created an extension, 6 months extension that runs until 30th June. Their excuse was, we are understaffed with the great number of responses that have come through. So I guess, we've been temporary authorized for the last 6 months in this new temporary authorization regime. And, we're not sure if it'll be completed by the deadline or there'll be another extension. So, I mean, I think the FCA is quite pragmatic as they are in most things, but, you know, with the challenges, first, you've got this huge bull run, so huge surge of interest again. How do we deal with this? As crypto grows, you know, at one point you're looking at, you know, just the basic AML regulations of how your company is approaching them. But yeah, understanding, well, it's quite layered. It's not just one set of regulations, but how does this whole industry interact with the rest of the, you know, the financial system? And is there any sort of repercussions if we, you know, deal with this in different ways? So definitely taken a time, and even with a forward-looking agency like the FCA, you know, it's been incredibly slow to make progress. And you know, it's a similar situation in Australia. So I don't think there's, you know, one jurisdiction who gets it completely correct. But I think it's, hopefully we have that sort of discourse with regulators. You know, the companies are the ones ultimately having to deal with these things. So, you know, I think we benefit from a stronger regulatory environment. At the same time, you know, we've got to sort of expect that, you know, things aren't definitely going to be smooth, or, you know, it's or a short period of time that we expect things to move. I mean, it's similar. I mean, ride sharing, different types of new and innovative services have all had, you know, some sort of adversity in coming to a thing that's both equitable in eyes of regulators and I guess beneficial to users at the same time. So I don't know when we'll reach that equilibrium, but it's definitely not coming anytime soon. There's still quite a lot of compromise still to go until I think everyone is hopefully happy for a bit.
Great, thanks, Asha. And I'm aware of time, actually. The last 40 minutes has flown by, and I can see that we've got quite a lot of questions. So I have a couple of final questions from me, and then we'll go to the Q&A. But what innovation in the crypto space would you each like to see next? Maybe Sam, coming to you first.
Well, so it's not about like what will be next, but what's coming up, because we're very deep in with working with our clients. But you're starting to see, and I know we just touched on regulation, but decentralized autonomous organizations, DAOs, because a lot of these DeFi protocols that have taken off of the last year, they're run by DAOs. So they're run by these decentralized autonomous groups of people globally. And that's how kind of, for example, like, Uniswap as a decentralized exchange is able to run 24/7 and not like shut down because of a market crash. So I guess I would like to see DAOs become more common knowledge and people kind of participate in one, or learn more about it, and then decentralized finance, for that to be more of a understood term in the media.
Brilliant. Adi, what would you like to see next?
Wow, I mean, I think this is all really, really early. Right? I mean, if we look at the NFTs, we look at DeFi, we look at crypto, there's still a long, long way to go on a lot of this. So I would like to see maybe more convergence in terms of the platforms. I think if I look at certainly the world we're in, more the smart contracts side of things, everybody would, or most people would like to be on Ethereum, but Ethereum has become too expensive and too slow. And so people are exploring other platforms and platforms that are attached to Ethereum and so on. So we still have a scalability problem. And the beauty of what we've seen in the last year is just the liquidity and the efficiency that comes with these things being on the same platform. So the DeFi protocols and the DEX, decentralized exchanges, and the NFTs all being together in the same place where they can easily interact. But we don't really have we still have friction with the platforms. So I think it would be good to get past that. And then also the regulatory side. I think it would be good for everybody to have more comfort that we can use this new technology and we can use it in these open forms as well, and we can harness these tremendous innovations and efficiencies but at the same time, not be worried that the whole thing's going to be shut down because the regulators can't find a better way to provide the assurance they need. So that's really, I mean, that's a big list, right? I guess.
And I actually have a big question to follow. Actually, is if you could each say what you think the crypto space would look like in 10 years, what do you think it would look like? Asher, coming to you first.
I think it'll be a battle. I think, Bitcoin has always been quite tribalistic, and, in crypto as well. There are some things that are, I think, worth more than money to some people, and that's, some sort of values that a decentralized currency has. And so I think there's always going to be some sort of push and pull, again, between regulators, around people who are, between corporations and users, between usability and, I guess, more centralized aspects of things. So I think every sort of self-interested group has got to sort of push for whatever their community stands for. We've already seen, Bitcoin sort of split and fracture into lots of different coins because I guess people value different things. And as more people come into the community, banks, governments, they're also going to have some sort of agenda for themselves, and which is fine. But with a larger community, I guess everyone will have to sort of state what's most important to them. If that's, increasing the value of my assets, or, more decentralization, or, stronger regulation. So I think it's going to be more contentious, if anything.
And Sam, what do you think 10 years time will look like?
I think that there will be, I think on the point of what Adi brought up, there'll be two worlds. And I think that there will be this decentralized financial world, and then there'll be like the physical, like the centralized world. And I think there will be, maybe similar also to what Asher said, like the battle, but two different worlds, but a big decentralized financial world.
And Adi, finish off.
I'm not sure about that. I think there'll be, first of all, I think there'll be a lot of dropping off of current projects and initiatives. Just like we had in the .com boom, right? You get your big survivors like your Google and Amazon, and I think that's what you're going to see here inevitably, because to get the value, we've all got to be doing stuff in the same place. We've got to be able to easily interact with each other. So I think there'll be less of them, and the ones that do make it through and become substantial and offer a lot of value will become much more widely used. Then I think in terms of the existing institutions, I think this stuff will have to merge. I don't think, maybe there'll be like some outlier usage, a bit like there is now. But I think, for the technology to go mainstream, there really has to be some much more of a merging of the two worlds. And I think that that could rock the financial services world in many ways. It's for me, it's efficiencies at the end of the day, efficiency and value. And so it's only those platforms that are actually offering real value and real efficiencies that will make it through, and will be integrated, I think, with the existing. We'll see some sort of shift.
Brilliant, thank you. So we've got a few questions from the audience. So the first being that, NFTs seem bizarre and a complete novelty. Do they actually have any real purpose or use? Who wants to answer that one?
Yeah, I might go with that. Yeah, I think, Warhol said art is what you can get away with. And, art is, basically novelty and in itself, right? So, we've seen, why is a painting worth 20 million or not? I mean, if anything, who benefits from this? Artists, which, I'm happy for. If you could find something you do generates money, and I think that's a win-win situation. But if you think of, other things that seem utterly bizarre and novel, like taking pictures of your food and posting them online, it's somehow become accepted that these bizarre novel things like, food blogging or, making videos of yourself eating food are somehow a cultural phenomenon and trend. And, everyone spends, half an hour a day or whatever on social media apps looking at other people's food. So I do believe it's bizarre and, novel, but if anything, that creators are getting paid for it. So I think that's definitely a net positive.
I'll tackle that as well. I think there's a couple of things here. One is there's liquidity going on here, right? That's the main thing that's been brought to the market, is that artwork can now be bought and sold online, digitally, traded and so on, right? So that liquidity is again a kind of efficiency, right? And it's also bringing money to the artist. I also quote from a conversation I had with one of our clients who's been in the art world for many years and dealing in artwork, and in particular has been behind some of what's happening in the digital artwork and NFTs. And he said to me, look, he said, one of my clients has been collecting regular art for years, and she's got so much that she can't possibly put it up in her house, right? She has some of her favorite pieces at home, but she buys and sells all these pieces that go straight into her warehouse. So she doesn't see them. But she's doing a couple of things. One is she invests in the ones she believes in, that she thinks these are great artists and these pieces will go up in value. And two, she loves it. So she's supporting the community, she's supporting the artists, she's supporting and being part of something that she loves. And now she can do the same thing with digital art, right? She doesn't, okay, she might have a monitor, she might not have a physical piece at home, but in any case, she wasn't seeing all those regular pieces either. She wasn't sitting there looking at them all day. So the fact that it's digital, the fact that she can trade it, and the fact that it's supporting the artist in the same way is where the value is.
For me, without getting too technical on NFTs, because we just spoke about it in the context of art, music, but NFT, the technology itself, shows who is the original creator or owner of something. NFTs could be used, for example, for legal contracts. So it's also understanding the technology and the value of that. So I think NFTs do serve a purpose, with tracking things. How do you know this is the original document? This is the original contract that you signed between two parties. That's what an NFT can be as well.
Great.
Yeah, I totally agree.
Thanks. Another question. Do you feel the decentralized nature of blockchain-enabled apps and organizations can comfortably survive the centralizing pressures of regulation and the way we currently tend to organize? Who wants to?
I mean, I can have a go at starting that. I'm sure Ash has got a bit to say on it as well. I would, with the regulators, I think you need to take a few steps back, and instead of look at how they regulate things today, say, what are the problems that they're actually, what are the things that they want to look out for, and what are the protections that they really want, right? What are the things that they're trying to protect against? And if you do that, then it's not about centralization or decentralization, because you can have a decentralized system where you still have certain ways of checking things and enabling things and so on. So that's what I think is required from the regulators, kind of not to try to take the existing set of regulations they have and just try and overlay them over here, because that clearly doesn't work. But it's about trying to protect against the dangers. The dangers are the money laundering, the use of funds for for terrorist activities, the potentially granny putting her life savings into a scheme which is nonsense. So the kind of protections that they want to put in place, which I think are the protections that people need, right? That's why we have them. It's really about how do they have those protections in this technology, and I think it is possible, right? But there's a game going on between the current ways that things are being built out and the regulator trying to catch up and understand how to make those things safe.
And on the note of surviving, Adi brought up a good point about NFTs earlier, about there's liquidity in it. So if people are putting crypto or their money into the decentralized blockchain apps and there is liquidity, that's also part of them surviving through it. And as I said, there's decentralized kind of protocols that can't necessarily be shut down by regulation in a sense. But if there is demand still for it, and if there's money kind of flowing in, that's how it can survive through pressures. But then, yes, it's important to protect people and their interactions with these apps, which is what the governments want to do.
Asher, anything you want to add on that?
Pretty good summary.
Perfect. Another question. So Cardify report that 1 in 3 crypto investors don't understand blockchain. Isn't that a massive risk to blockchain projects, as these investors are just into it for the short-term profit?
I might have to go. I mean, as a consumer-focused company, yeah, I think there are the majority of users don't really care about the technology. And I mean, as a consumer-focused company, it's really about, delivering whatever solution you have that's, purpose built and where it meets your community at what they need. So I don't really mind too much if, our users of our platform don't really care about the same values that cryptocurrency seeks to build on. But as I guess the custodian of the experience, I hope that my interpretation of what I deliver to customers, both gives them the certainty that this is something they want, and at the same time build in protections. I mean, if you think about things like back to regulation, AML, KYC, not every exchange has that, but it's really up to the company that interacts with the customer to see how that's interpreted and I guess built into user process. So again, I hope to deliver the sort of benefits of DeFi, staking, some of these new protocols to our users. If our users understand how that works or not, I guess it's up to us to educate and also deliver a product that is meets the user where they are.
Brilliant. Sam, do you find that with any of your clients in terms of, it goes back to the education piece and how they kind of work with their investors and kind of people in their network? Yeah,
for sure. And it's also kind of, I mean, a lot of disclaimers like go at it at your own risk, like we don't give investment advice. I mean, the general, rule for people who don't understand what they're investing in, like just in general, not just for crypto, is just make sure you know what you're putting your money into, and if you don't, then just be prepared that you could lose it all.
Brilliant. And then I'm going to take one more question from this Q&A, but there are quite a few. So after this, I think if you're all able to stay for some virtual networking, there may be a few questions coming directly to you. But this last one that I'll pick out is, what's your view on the use cases for turning satellites into blockchain nodes? Anyone have a feel for that one?
I mean, the thing that blockchain brings, the underlying technology, is it brings it's kind of resilience, right? So that your records are harder to delete or change, your ownership records, because there's a group looking after them, and this group is spread out around the world, and there's all sorts of people and organizations behind it. And so maybe having some out in space makes it even more resilient. That's the only thing I can think of, really, but. Maybe there's a case for that.
Well, maybe
different levels of security and different levels of resilience.
Okay.
I'm sure Elon Musk has got some Dogecoin nodes going up as we speak.
I'm sure. Okay, brilliant. Oh, thank you all so much, and thank you for everyone that sent questions. I know there are a lot there. So Adi, Samantha, Asha, thank you so much for joining us. If you are able to stick around for a bit of virtual networking, even for the next 5 minutes, that would be amazing. But thank you so much for your insights and your time. It's been fantastic. The last 55 minutes have flown by. I don't know how it's gone so quickly, but really appreciate it. And yeah, for everyone watching, see you next time, and thanks for watching.
Thanks so much.
Cheers.
For having
Thanks
us.
everyone.
Thank you for having us.
Bye.
Thanks.